Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay guys, so we're gonna hop right on into the charts. So starting off with the dollar, looking at Dixie, still trading into this rising trend line. Now, if you look closely, obviously you can see we're about 5 minutes away from this daily candle closing, and then we go into the weekend, but we have begun the process of breaking down from this rising trend line. However, this is not a decisive breakdown, okay? Now, it may lead to one, all right? It may lead to one. We may see Sunday night or Monday morning that we have a gap down or a continuation of this downtrend in the dollar, but it is not confirmed yet. So you don't want to get ahead of things. You want to make sure you stay patient and observe what's happening. Do not trade your ideas, trade what you see. And what I'm seeing here is that dollar is still holding this general zone, and then we'll have to wait and see as we come into the end of the weekend, whether it's during the futures markets or when the equity markets open up on Monday, we will have a decision. Okay, we will either continue to hold this level and likely lead to a minor rise up, which will then lead to pressure on the risk on assets, namely stocks and crypto, or we will have that continuation, that breakdown, and then we can look for the move down towards 100 and potentially even sub 100, going down to 97.32. So this blue zone down here may be the ultimate level we see the dollar get to during Q1 of this year. But once we get down to this level, okay, whether it's now or it's a couple months from now, look for this zone to hold as a generally very powerful support, because this trend line here, okay, so this trend line here that's descending, this trend line here coming into the future here is a monthly level. So this zone right here is where the monthly chart, the monthly structure broke out bullish, and now we're coming back to test out the breakout zone. That's why I'm still bullish on the dollar even after this retracement, because what I'm seeing on the monthly chart, now it's not going to be very clean because I have all these drawings, but let's go there. What I'm seeing on the monthly chart here is that we're pulling back down to come back to this descending trend line, testing it as the breakout level. And that's very common, especially if you're going to have continuation over the long term. So as we come down towards that zone, watch for us to potentially hold this zone, this level, whether it's here we bounce off and then trade within the blue zone, or we just grind down lower holding this descending trend line until this gets decisively broken and we take out this low down here. It is bullish, okay? So if we hold this level, watch for over the next coming months for that continuation up and probably looking to attack this high pivot. So this is why over the next couple years to a decade or so, pretty much from 2020 all the way until 2030, 2032, I'm bullish on the dollar unless we do take out this level here on the monthly and close under it. Then we're looking for the dollar to really just plummet, okay? So don't get ahead of yourself. We are looking to have a bullish retest of the breakout, but we will wait and see how price interacts at that zone once we get there, whether it's now, this coming month, or it's sometime later down in this year, okay? All right, now let's take a quick look at the Dow, the S&P, and NASDAQ. So the Dow having a nice little pop up today. So what's interesting is now we had a very nice bullish candle after this nice little surge down from this fair value gap. Now this candle does imply continuation to the upside. Now I'm not seeing major continuation unless the dollar does gap down, unless we have major weakness. Now if we have major weakness, we may actually see us come right back up to this fair value gap level and pretty much look to kind of create a bigger consolidation here and potentially even a breakout from here. But if we do have just that, kind of grind on that rising trend line where the dollar's not really decisively moving in any direction, sometime early next week, look for a potential rise to this bearish fair value gap. So pretty much what we're trading into now, what we closed into, look for continuation higher. So maybe all the way back up to 33,840, maybe slightly higher, because we do have another little fair value gap right here, and you're starting to see some of these fair value gaps kind of overlay on each other. So we have a lot of liquidity just pulling right over here. So we could see the Dow get back towards 34,000, maybe slightly higher. But overall, as long as the dollar holds that trend line, I would have a bias to the downside in the short term for the Dow to take out this low here that I have circled, returning back to this descending trend line, and then potentially even filling out these fair value gaps, also taking out the liquidity that's pulled under this pivot. So watch the Dow. We'll get a lot of answers next week, but overall, it's been a pretty good week, especially if you've been in Lemon Garden. We've been long for the most part, so we're doing very, very well on both stocks and crypto. But now we're going to go into the next chapter of this year. Are we going to have a bullish, bear market rally that's going to be extended out for 1 to 6 months, or was this it and we're just going to have continuation of the macro trend? A lot of answers are coming our way. Next is S&P. S&P also having a nice bullish pullback up and coming right back into this descending trend line. Now, this descending trend line is holding as of now, but when you have something like this, where I always tell people watch out for this, when you're fighting a descending trend line, okay, or any trend line for that matter, obviously the more you touch it, the weaker it gets, but it's the more you touch it in quick succession, the weaker it gets. So over here, you have the beginning of the trend line, then you have the first touch here, okay, nothing crazy. Then you have the touch here. Now, this wasn't weakening from here to here, okay? So it wasn't like the descending trend line was weaker here than it was here, because this was a plenty amount of time before we had price come back and test this level. However, it is weakening here. So we came back, touched it here, then we had another touch right here. We had multiple touches actually. So you had this little wick above it, then you had another little wick at it. So right here, another touch, and then you very quickly again touched it again right here. And now potentially this is implying continuation to the upside, because you've made a low and now you've made a higher low for the first time, and this is potentially another higher low right here. You may actually have enough fuel to break through. Okay, so this gives us some evidence that the dollar is not going to strengthen, and that there's going to be a continuation to the upside sometime next week. Okay, now it's not guaranteed, it's all probabilities, but we are seeing a real fight here by the bulls to try and get an extended move up and probably get towards this first level of resistance. This zone here about 4,200, 4,250 is going to be the first zone where the liquidity is pooled. So we have fair value gaps right here we want to watch out for. So this bearish fair value gap is going to be the first level that I would look out for price to get to right here. All right, and then we may actually see a pullback from there, similar to what the Dow did. Comes up to this level, trades within it, then pulls back and tries to come back and test the breakout bullish and maybe have continuation. But I'm liking what I'm seeing from the S&P, a real fight here by the bulls to try and have an extended move up. Next is the NASDAQ. So NASDAQ, same thing. So I would say we've completely filled this bearish fair value gap, so we can take it right off. And this is really implying continuation, a lot of strength. And again, a lot of this came off of the Netflix earnings. So if you're paying attention to a lot of these companies that are reporting their earnings, Netflix had a great earnings, saved the market in some cases. So really pushed that bullish sentiment, and we're seeing that now. So NASDAQ, it being one of the most overinflated sectors, it being the risk on tech sector, is finally seeing some major implications of upside to come up towards this green zone. And I'm actually seeing that happen fairly quickly. If we get that weakened dollar next week and the S&P breaks past its descending trend line, you're actually probably going to see the NASDAQ break up hard. Okay, took out the liquidity here, and it's likely going to try and attack these pivots right up here. And once you get up to that level here, I think it's pretty much coming straight through into this larger fair value gap right here and tapping the low end of this green zone here. Okay, so I'm very bullish on the NASDAQ, on that the dollar is weak. Excuse me. If the dollar doesn't come out weak, very early in the week, then I think we're going to look at a larger consolidation for the indexes, and then probably lead to continuation to the downside. Okay. All right, now let's get to oil real quick. Let's take a quick look at oil. And oil, again, just showing strength, really not budging. And I'm just going to keep saying it over and over. Scariest chart in the world, implying continuation to the upside. Beautiful price action down here on how it's holding this monthly descending trend line. Very bullish. And I'm telling you right now, we're probably going to see continuation coming all the way up to at least 90. And in my opinion, you're probably going to have a spike in demand with supply being low, and you're going to see the hundreds again and potentially even higher. So watch out for oil. I've been ringing the alarm bells for the past couple months. This is the scariest chart in the world, and it is very, very bullish, which does mean rising prices in food, in a lot of products, and also rising in costs for transportation. So be wise out there. Make sure you are as conservative as you possibly can and save where you can. Do your best, guys. And if you have any questions for me or anyone, make sure to join the Discord. The link is in the description below. We have a lot of smart people in that Discord, and you'll at least get a better idea of what you can expect going forward and get some really good ideas. Okay. All right. Next is gold and silver. So gold continuing higher, but what I liked from gold is we're finally getting a sign that we're going to slow down. Okay. So we had a nice little bullish move up yesterday. Now today almost showed continuation, but it went very, very silent by midday, and this tells me that we're going to at least see a consolidation back down towards this fair value gap, and in that sort of structure it tends to lead to a larger pullback. So not all the way down here, don't know if that's going to happen, but the probabilities are high that we at least come down to this fair value gap and start making kind of like a descending triangle structure, or at least an ascending pennant potentially. So you may actually see where you break down a little bit and then you start making like this little double top structure, and then you make lower highs, something like that. Okay, so it's very bullish still in my opinion, but look for that pullback. We have grabbed a lot of liquidity, and we've reached the zone where I've said like this zone here is your reversal zone. Okay, bullish pullback, no doubt, but a pullback for sure. The pullback was potentially going to happen here in this rising triangle structure, this rising wedge, but we had that continuation higher because the dollar went extremely weak very fast. And now that the dollar's hitting a zone where it may actually slow down in the selling, and we may get that small little bump up, watch for gold to go inverse. But like I said with the NASDAQ, the S&P, and the Dow, if we open up weak on the dollar and aggressively weak, then look for gold to have another shoot up. Okay, and this would be the next zone to watch out for. But extremely bullish on gold. I'm not advocating you chase it. I think that this move, if you want to get in, you should have gotten down here where we did in the Lemon Garden. We were in GDX, we were in GLD. We've slowly taken our profits out as we've risen, and now we're just going to wait and see, wait for our opportunity to potentially short or look to reload back into those bullish positions. All right, next is silver. Silver trading up into the fair value gaps as well, tapping into this liquidity. It's filled this one, it's tapping into this one. I'm going to keep these on here, but to me this is showing potential signs that we will have a breakdown eventually here. Now, not a major breakdown, again, same thing as gold, a bullish pullback. We broke through this consolidation, have been making higher highs and higher lows. We broke through this consolidation as well, so watch for, if we do get that pullback, to come back to this consolidation's top here, or this general zone, or potentially all the way back down towards this consolidation right here, so back towards this fair value gap and holding that, again making another higher low structure. Nothing here is telling me with gold and silver that it's bearish, that the run is over. We're just, in my opinion, showing signs that, okay, we are looking for a bullish pullback, but as long as the dollar doesn't get aggressively strong, essentially breaking past 106, getting to 108, it's likely that gold and silver are just doing a reload, and then they will have continuation for the rest of this year. Very, very bullish. All right, now let's get to Bitcoin. Let's take a quick look at what's going on with Bitcoin. Bitcoin, like crypto, has been doing great, and pretty much as I've been, I'm not trying to toot my own horn, but I've been warning you, right? I've been saying, hey, watch out, don't short here, don't get super bearish, because it's not bearish. I've been watching people try and short a weekly breakout, and it's foolish. It's foolish, but someone has to. Someone has to. Some people have to be the fuel for the move to the upside, and the probabilities were very, very clear. Weekly breakout, and the weekly candle that printed next was just implying continuation. All right, and that's what we're getting so far. Now we're trading into this fair value gap, the bearish weekly fair value gap. We're tapping into the zone where I'm going to tell you, watch out for any reversals, but we're not there yet in my opinion. My levels that I would be looking out for a major retracement down, maybe even the continuation of the macro bear trend, is first looking at 24 to 25,000. Okay, so the top end of this pivot here. Okay, we may see Bitcoin slow down here. In my opinion, that's unlikely. That's not the most probable area. All right, it's not low probabilities, but it's not the most probable area where Bitcoin's going to get to, and then have continuation of the bear trend. Now we may get there, and then Bitcoin starts to flounder. Maybe making a higher high from this pivot, and then we have a bullish retracement back down, but it's more likely going to build out a lower high structure for continuation. Okay, what's most likely to happen, you want to go to the monthly chart to give you the best idea of what you can expect coming out of Bitcoin. Okay, so Bitcoin here on the monthly chart is telling us a different story. Now we have about 11 days. Okay, so within this 11 days, as long as Bitcoin doesn't just sell off under 18,376, this 3-candle pattern, okay, this 3-candle pattern, where you have bearish candle after continued sell-off, then you have a doji, and then you have a bullish engulfing, implies continuation. And in my opinion, the most likely place for Bitcoin to begin the lower high process from the macro side of the market is here around 30,000 to 36,000, 37,000. So this bearish fair value gap here on the monthly is the most likely place if Bitcoin's going to fail, which the failure here is more probable than continuation to the upside. Okay, just to be very clear, I'm not calling for all-time highs right now. We're not in that market as of now. I can be proven wrong, but the probabilities are saying this zone right here is what's most likely to happen on the monthly chart. Okay, we can reverse down from here. We're already starting to trade into there for sure, but the probabilities are that we're coming up here, grabbing the liquidity here, making a lower high on the macro chart. Okay, similar to what we did over here during 2017 to 2019. Okay, and then we have that continuation lower from there, going into the capitulation side of the market, where we finally make a real bottom, wherever that will be. Okay, so enjoy this ride. I see this as a bear market rally, but I would not be looking for all-time highs coming anytime soon. Now, I don't know the future. No one knows the future. Maybe this was the bottom, but that's not where we're trading. Okay, so if you're in the lemon garden, we're long, we're enjoying ourselves. But as we get closer to these zones, from here, from 25K all the way up to 28, 30, 35, 36K, we're going to slowly scale over our longs, and then we're going to start flipping short. Remember, guys, members, I'm talking to you. What do we always do? As the retails get bullish, we slowly get bearish. We don't immediately get bearish, slowly. They need to buy what we're selling, and then we do that on the other side. Rinse and repeat. We've been doing it all year last year. We're going to continue to do that this year. All right, guys, that is it for this recap. If you have any questions or you disagree with me, make sure to leave a comment down below. And if you'd like to join the Lemon Garden Discord, make sure to join the Discord via the link in the description below and join one of our services. I have a swing trade service, a tutoring service, and a day trade room service. So if you're interested in any of that, check out the Patreon link in the description below. And remember, if you're actually, I have one more thing I want to mention. I am looking to start a new, I won't say service, but I'm going to start a new initiative. I'm looking into potentially into funded accounts, so FTMO, all these other funded prop firms, whatever. So I'm looking into potentially starting that, where I can help people get funded. Now, I know there's a lot of interest in that. I'm not going to immediately be doing this. I want to take my time, because I want to make sure if I can help people get funded, they need to know certain things. They need to be fairly versed in how to trade. So, again, I'm kind of giving you a early warning that if you are interested in becoming a funded trader, I am looking at a way to help people become funded. Make sure to join the Discord if that interests you, but we're not close to that yet. Okay, we're not close to that yet, but I will keep you in the loop as I start to develop an idea of how I'm going to be able to help people do that. Okay. All right, everyone. Remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.